question from Scott. Sorry, Scott. Totally blew your last name.
Scott with a last name that we're not smart enough to say.
There you go. Third time is a charm. Scott Serracusano.
Is it Italian?
It seems to be.
Is that first letter C with an I after it?
No, it's an SIR.
Okay.
Let's get to the question. Scott writes, I'm 25 and very new to the investing world and have felt somewhat lost in which direction I want to take my portfolio. Let me just pause right there and say, hey, that's just great that you're 25 and starting your investing journey. So kudos to you.
Start with some index funds.
There's a specific stock, Twilio, that has a very high valuation, and I hear words of a bubble popping. However, I like the idea of a new company showing a lot of strength and taking people by surprise. They have a very strong outlook, and their potential for growth with their super network gives me a positive outlook despite all of the bears. Even if a stock is considered overvalued, is it still worth investing in if you see long-term growth with the risk of a significant pullback? Or should I wait/hope for another dip and buy in on that? I don't want to miss the train, but I also don't want to make an impulsive purchase. Any help would be appreciated. Keep doing amazing things, guys. Thank you. Thank you, Scott. Great question.
What an excellent 25?
Yes.
Well, that sounds a lot smarter and wiser than 25, recognizing that the impulse to get on the train is really dangerous. I own this stock, despite those high-looking valuations. So a lot of this depends on how much money you've got, how much money you're willing to put in, where the rest of your money is, what's your risk tolerance, what's your timeline. I believe that if you are looking for high-growth companies like this and you can tolerate some major ups and downs, I don't think this is this kind of a stock that becomes a zero at any point, but I definitely think it'll fly around. I mean, we're trading at like 15 times revenues or something right now. This stock is going to be a wild ride. I own it because the more I looked into it, and I'm not an expert, but the more I looked into it, the more it looked like kind of a mini next generation AT&T, if you will, that they made things so easy for developers that's how their technology is being embedded in so many other platforms. That they are kind of becoming a default, the Google, if you will, or the Kleenex, if you will, something along those lines. And to me, that's very powerful. And companies like that, if you have the risk tolerance and the capital, I think are always worth owning a little bit of. As for waiting for a dip, I have learned over the years not to do that. I have waited for dips on Netflix, waited for dips on Amazon. When they didn't come, then I forgot to buy at what, was 15 times smaller valuation than it is now. So if you like what a company's doing and you have the risk tolerance, buy a little and then watch. That's what I tell everybody. That's what I do myself. I can't give individual advice, but that I think is a good strategy. Yeah, along those lines of waiting for a dip, I have also learned over time through painful experience, not that painful, but painful enough that I never want to fall in love with the price, because any time in the past when I have been, quote unquote, waiting for a dip, I have put a price tag on what I think that dip should be. Mm-hmm. And I've been in the situation where it's like, well, the price has fallen, but it hasn't fallen to where I think I should buy it. And then it ends up rising and never stops rising, and I miss the boat. Yeah, and I've recently started owning more stocks. I think I own more than 60 stocks now. That works for me. One thing I like about it, I've always got something doing well. If I've got something in the crapper, as we say, it doesn't bug me that much because I've got so many other stocks. So I mean, a lot of this will depend on your overall strategy. This is a small portion of my portfolio, as all of them have to be when I own that many. And I just find that works for me. And he's 25 years old. You got some time. So don't bet it all now. Don't bet it all now. And the most important decision you can make is getting into the right frame of mind, putting that money away, every month. And one thing I do is just, about half of my retirement stuff just still goes into index funds every month. And that way you're saved from a lot of stupid mistakes because it's on autopilot.